Welcome to the Fear and Greed Afternoon Market Report for Thursday, the 17th of June 2021, where in just a few minutes I tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. Today's financial markets were dominated by the release of labour force figures. The unemployment rate fell to 5.1% in May, the same level as before the pandemic, after more than 115,000 new jobs were created during the month, mostly in full-time roles. The raw numbers in the Australian Bureau of Statistics release were remarkable. The jobless rate fell from 5.5% to 5.1%, with full-time employment rising 97,500 to almost 9 million. The jobless rate is now back to the level it was in February 2020 and about where Federal Treasury forecast it would be in a year's time. The underemployment and underutilisation rates were both lower, and the hours worked and participation rate were both higher. The S&P ASX 200 closed down 0.4% today to 7,359 points. It was still a pretty good performance given the drop in Wall Street overnight and global concerns about central banks tightening monetary policy as price rises increase. Undoubtedly, the strength in the labour market helped the local market. Communications, energy and material stocks fell hardest today. Telstra dropped nearly 2% and REA Group fell 2.8%. Fortescue and BHP were both off 1.5%, while Rio was down 1.2%. Coles Group held its Investor Day, and its share price fell afterwards, down 4.5%. That's not something any CEO likes to see. The retailer said it will supercharge its capital investment plans in a bid to get in front of its competitors in the supermarket world. Whitehaven Coal was the worst performer. It tumbled 11.5% after it said it would produce less coal than forecast this financial year. Several of the gold miners also underperformed. The big banks outperformed, with Commonwealth Bank continuing its stellar run. It finished up 1% higher, though Westpac and ANZ did even better. Afterpay was up 1.7%, and Newey Limited was the best performer, up more than 6%. That stock bounces as much as any other on the bourse at the moment. In corporate news, Challenger said it would hold more regulatory capital in the future, lowering its target return on equity. The annuity provider and fund manager also provided profit guidance for next financial year, which was well above the 2021 guidance. Its share price fell almost 2%. The Aussie dollar went on a ride today. It fell sharply this morning after the US Federal Reserve said it was possible interest rates would rise in 2023 rather than 2024. That triggered a surge in the greenback and pushed the Aussie dollar to 76 US cents. But the strong employment figures caused the currency to rise again, and it's currently trading around 76.2 US cents. Just recapping Wall Street, the Dow Jones Industrial Average ended the day down 0.7%. The S&P 500 was off 0.5%, and the Nasdaq closed 0.2% lower. That's it for the afternoon market report for Thursday, the 17th of June 2021. Join me tomorrow morning for the regular edition of Fear and Greed, followed by an interview with Stephen Fennick, leading tech journalist, for a chat about the rise and rise of Amazon. I'm looking forward to that one. I'm Sean Aylmer. Enjoy your evening.